So trading for a career is an interesting topic. There's a lot of different paths that you can go and many different ways that you can make your living from trading. So I'm going to go through all the different types that I see out there in the world. Now, the first one is a prop trader. And an example would be something like S&B Capital. And a place like that, you go to their office, you trade with the other traders there, and then you work up consistency in your trading. And what they do is they give you a profit split from what you make for the firm. So you're not really putting up your own capital. You don't have any of your own capital at risk. You just have to design good strategies, be a good trader, and it's a very eat what you kill environment. So there's no salary, there's no benefits. If you aren't profitable, you're not going to make any money, but the upside is unlimited. So if you're really, really good and you keep negotiating a better profit splits, you can make more and more money. And some of these guys can pull in high six figures and even seven figures over the course of a year. All right, the next path would be a hedge fund or market making firm, getting a job at one of these bigger established players like D.E. Shaw, Jane Street, Bridgewater, all those types of guys that already have a large amount of assets raised. And these are much more institutionalized. It's going to be more of like a corporate job. You'll get a salary, you'll get benefits, but you'll still be able to work directly on trading ideas. But it's going to be in a team setting, and you're not going to own the intellectual property. It's not going to be your thing. You most likely won't have just your own trading book. You'll have to share it with other people, or you'll be working on some massive overall strategy. So it's definitely a good path though, because you get the consistency of the salary, you still get to work on the trading stuff, and there's upside for you as well, because usually if the firm does well or your particular unit does well, you're going to get bonuses out of that. So definitely a very good path for a trader, but it's hard to get into those types of firms. They're competitive, as you can imagine. Now, the third is family offices. And so these are a really rare thing out there. It's tough to get in because you usually need a nice network to get in. You need someone that knows someone to get into these types of things, because they're small offices. They might not be more than 10 people in these things. And basically what they're doing is managing a high net worth individual's money, and they're making investment allocations. They might have their own internal desk. So there's a bunch of different roles on there, but you can manage to get in there. It's a pretty nice gig because you usually get more control over what you want to do. It's just you. You're not working in as big of a corporate atmosphere, so there's a little more freedom. But it's tough to get, and not all family offices are the same. Some are very aggressive and they like to trade really hardcore. Others are just very conservative, and it's just more of an administrative role. So that's another option, but again, it's very tough to get. Now, the next one I want to talk about is the pension fund endowment game. So those are things like CalPERS or Texas Teachers Retirement System. And that's going to be, again, a corporate job. It's going to have benefits, but it's not really going to be coming up with interesting trading strategies. Those guys typically like to do more passive investing, the allocation model, 30% in stocks, 30% in bonds, etc. And then also making allocations to outside managers. So you'll be able to evaluate other different strategies out there, different hedge funds, and possibly be involved in that process. But as far as them giving you a pile of money and you just making your own trades, that's not really how it works in those huge endowments and in those big pension funds. So it's a little bit different than what you think is a standard trader's job, but still you're in the industry and you're earning a nice salary and benefits. The next one I want to talk about is starting your own hedge fund or starting your own fund. And this is a real tough path because you have to raise a lot of money to be successful and to make the business model work. And that requires taking a lot of meetings, constantly fundraising, and there's a lot less time actually trading or developing trading strategies. You're basically an entrepreneur, you're a business owner, so you'll have to take care of everything that's involved in that, operations, administrative, actual trading, sales and marketing, especially in the beginning before you can hire on staff to take care of those roles. So pretty tough going, but it can be very, very fruitful if you get big enough, right? Because some of the biggest hedge fund titans, right, that we hear about today, those guys started from nothing and started with tiny little seed funds. But in this atmosphere, it's very hard to get going, and the competition's tough. You're up against all of those big guys. So something that you should really only do if you feel confident that you have a very differentiated trading strategy or product that the allocation market out there would really want. All right, now I want to talk about the RIA, the Registered Investment Advisor, and there's a lot of different flavors of this type of career path. I'm going to focus on the wealth management aspect of it. So what these guys do is they are sort of like a startup hedge fund, except they're just taking money from individual clients. They're not running alternative strategies or crazy high return strategies. They're more of in the asset allocation model, and they're planning for retirement for people. They're helping people manage their finances. It's a very one-on-one type of role where you're talking to each client, making sure what you're doing is right for them, making sure what you have set up for them is going to fulfill their life goals. So you're not going to be focusing on the actual individual trading strategies. There's some degrees of freedom. You can throw in interesting stuff if you want, but generally these guys stay pretty conservative and pretty vanilla in their approach to the markets. And if you become a RIA under another firm, so you're not starting your own firm, but under another firm, you're basically doing next to nothing in terms of trading and investment decisions. There's a little bit, but you're following the playbook of that firm, and you're just going out and you're getting clients. You're basically in a sales and marketing role, and also you're in some of a psychologist role. When the markets get tough, you have to engage those clients and make sure that they don't pull their funds or puke out or deviate from the strategy that you have in place for them. So that's a pretty good role, though, because you have compensation, salaried usually, with benefits if you're working for another firm. If you're working for yourself and it's your own RIA, you get a percentage of assets under management. So that's the more entrepreneurial flavor of it, but definitely a viable option for people that want to go that route and have that client interaction, but still pay attention to the markets and have a little bit of interest in what's going on. Now on to the individual trader. And this is one that a lot of people dream of becoming when they first get into the game. They get all excited about trading. They think to themselves, oh, I can grow an account and just live off my account. I won't have to deal with bosses. I won't have to deal with clients or any of that stuff, any of those nuances. But the reality of the matter is that path is extremely tough unless you're well capitalized. You need a lot of money to make sure that you can survive, because if you're an individual trader, you're not getting any type of salary. There's no guaranteed money. There's no management fee. There's no benefits. So you have to pay all of those out of pocket. And it's pure eat what you kill. Plus you have all the downside risk of your own capital. So it's really actually the toughest route, and almost impossible unless you have a ton of money. And when I say a ton of money, I mean probably around $1 million would be something that can make people comfortable enough to survive off of that. Because if we stay very conservative with returns, let's say 10 to 20%, that's only 100 to 200K a year net, and you got to pay all of your expenses, your benefits, everything for your family. It's a very tough lifestyle, but it can be rewarding if you do get that critical mass of capital. Now, there's some people that take small accounts and they can consistently make a couple 100% a year. Those are in real niche strategies, and it's not for everyone. Those are usually very active and they're very tough to maintain. So it is doable, but this individual trader route is definitely one of the hardest. Now, the last one I want to touch on is an interesting one. It's a new opportunity out there, and I think it's actually compelling for new traders. And it's this concept of licensing out your intellectual property. So there's a bunch of these crowd research firms popping up. You've probably heard of them. They're called Quantopian. Another one's Cloud Quant. And basically what these guys do is they're giving you all the tools to develop automated or systematic strategies. And so you do have to have some coding knowledge, and you have to start down that train. But if you are able to author a particular strategy that they like, you submit the strategies to them and they like it, they will fund your strategy and then give you a cut of the profits. So you can basically create yourself a passive income stream in this way, because after they approve your algorithm, you'll just basically get mailbox money. And the numbers I've heard out there, around 10% of the profits. And when these guys make allocations, they're looking to make large 10 million plus allocations. So it's not crazy to think that you could get 100K a year just in royalties from an algorithm that they select. Now, it's still really tough. It's competitive. You might not have the ideas that they want. They're looking for specific things, but it's definitely a path if someone's interested in creating strategies and trying to design something in the market that could be profitable. It's a very low risk path for them, because all they have to do is dev out some strategies, test them, submit them. They don't really have to have any of their capital at risk. And it could be a part-time thing, which is the best part. You can work another job, have main income, and just do this as a side project for fun that could end up producing a good side income for you. All right, guys, that's the summary. I hope you liked it. I think that's a good description of each career path that I see out there for people that want to be in the trading industry and become a trader. If you have any questions about it, any of these topics, just put them in the comments below. We'll talk about it. Thanks for listening, guys, and I'll see you in the next video.